Welcome to Proven and Probable. I'm your host, Maurice Jackson. Joining us for a conversation is Anthony Milewski, the Chairman, CEO, and Director for Cobalt 27, which is a leading electric metals investment vehicle that offers exposure to metals integral to key technologies of the electric vehicle and battery energy storage markets. Mr. Milewski, welcome to the show.
Hey, thanks a lot for having me, and excited to be on here for the first time.
Glad to have you on the program to share the unique value proposition of Cobalt 27, which is a successful cobalt royalty and streaming company, in addition to providing shareholders a proxy to the metal. To really appreciate the context of today's interview, Anthony, I believe it may be best that we provide listeners with a basic overview on the global demand for electric vehicles, in which cobalt is an essential metal.
Yeah, so, I think you have to kind of take a step back and look at what I consider to be two of the most important industries on Earth, which are now sitting at the precipice of one of the biggest disruptions they've seen, potentially in the last 100 years, and that is namely the energy industry and the automobile industry. 60% today of crude is actually used in automobiles, and in the automobile industry, not only are you talking about a shift away from ICE vehicles, internal combustion engine vehicles, to electric, but you're also talking about structural changes in ownership with ride-hailing services, autonomous vehicles, and a bunch of changes. And so these changes are dramatic and impacting a whole host of companies across a lot of different parts of our societies globally. And at the heart of that change is the electric vehicle. And the reason for that is that the electric vehicle has the sensors and the technology on it to put forward the platform for the next generation of changes inside of the automobile industry, namely that autonomous driving and some of the other safety features that are being rolled out. So to kind of put forward or to put in perspective that change, I like to kind of think about where we've come from. And a few short years ago, EV sales were effectively zero. I mean, literally, they were just this novelty item that you kind of probably couldn't even ride in one if you wanted to. When we IPO'd, about 2 years ago, we kind of talked about 7% penetration in 2025, and even then we got pushed back. Now analysts are predicting in 2025 as high as 20 to 30% penetration. I think Canaccord actually is even higher than that in 2030. And so you're seeing a dramatic increase in the rates of adoptions that analysts are looking at. And then to kind of help put the numbers specifically to dates, 10% of car sales in November in California were electric vehicles. That's 10%. Similar numbers in Canada. Now, that was driven in part by Model 3 deliveries, but the point is, the acceleration of adoption of these things has really happened in the last 18 months, and we're seeing the automobile companies now really heavily push these vehicles, not only for the environmental aspects of it, namely cleaner air in large urban environments, but also because of the future of automobiles and the future of the automobile industry around autonomous driving and around automation.
This all bodes well for cobalt demand. Sticking with demand, cobalt is an essential metal in the manufacturing of batteries. What has Cobalt 27 excited about the battery demand?
Well, each one of these cars actually has a battery. So remember, today, the cobalt market is, anywhere from 105 to 130,000 metric tons of metal equivalent. And half of that demand today is actually batteries. But your iPhone, right? That would be an example of a battery that has cobalt in it. Your laptop computer, your iPad, just about any device that you plug into the wall and recharge it with the cord and then walk away has cobalt in it. So that demand already exists. But the demand that has us excited is really the demand from the electric vehicle. So if I just told you the market for cobalt today is about 135,000 metric tons, let's just assume. At 20% penetration, you're going to need something like 250 to 300,000 metric tons of cobalt just for electric vehicles. So what you see is, as the adoption happens, the actual use of cobalt grows exponentially, and we're seeing that happen, as we speak now with adoption rates and sales of these vehicles.
In the U.S., investors are aware of Tesla's Gigafactory, but Tesla isn't alone. How many megafactories are in construction?
Well, look, that number is interesting because it's changing all the time. In 2017, I think that number was 17. A few months ago, it was 70, and even a few more gigafactories have been announced in the last few weeks. So that number is over 70 now. And even as recently as this month, Tesla announced the construction of a factory in China, a gigafactory. But all of these automobile makers, battery makers, cathode makers have these factories slated to be built globally. One of the things about these batteries is the producers of them aren't particularly keen to be shipping them long distances. And so, unlike an automobile, which, is kind of highly consolidated in where it's manufactured, what you're actually seeing is a lot of different gigafactories being built globally around the world at a very quick pace. I mean, the pace is almost monthly. There's more gigafactories announced.
To truly appreciate the demand for cobalt in the 70 plants that are under construction, how is that number juxtaposed to the mega factories that were in construction just in 2017?
Well, look, in 2017, there were roughly, I believe, about 17, and today, I think the number is 72, I think, is the number that Benchmark publishes. So, that's a dramatic increase in less than 2 years. And we anticipate that that's going to continue, right? Right now, analysts are talking about, 10, 15, 20% penetration. But, what happens when 80% of all cars are electric? And so, we anticipate that going forward, that story will just continue to accelerate over time as adoption increases.
Let's move on to supply and see how these factories will meet production. There are some concerning challenges on the supply side of cobalt, which really makes the value proposition exciting for Cobalt 27. Where and how is supply currently being satisfied?
So it's interesting. The geology of the world is such that over 70% of cobalt comes from the Congo. And by the way, it doesn't come from the Congo. It comes from one little tiny area in the Congo. If you think about OPEC at its peak, it didn't control 70% of the world's oil. And so, one of the problems with cobalt is simply concentration risk. It comes from the Congo, where there are alleged human rights violations associated with mining it, and it's tough. So I think that's kind of part of the story. And the balance of the story is that it comes from nickel outside of the Congo. So in the Congo, it's copper. In the rest of the world, it comes from nickel, in Canada and Australia in particular, but also places like Russia and Cuba. And those nickel projects, not all of them, but many of them are nickel laterite projects with enormous capexes that have overrun. And so, it's not as if, outside of the Congo, you can simply just go and dig up cobalt. Now, in the Congo, it's slightly different. One of the things that we've seen is the ability to have artisanal cobalt. And so, the price of cobalt ran up to $44 and has now since eased off. And it's eased off in large part because of artisanal mining. And artisanal mining can mean different things to different people. It typically means that an individual is showing up and shoveling cobalt. That actually, in some cases, is actually legal in Congo. That's not illegal per se, although most of the time highly environmentally damaging. However, what the problem is in the Congo is that, or the allegations are, is that often child labor is used for that artisanal Congo. And so you have concentration risk, and then you really have supply chain risk. And you really have a need now from the automakers and the consumers and the battery makers to kind of secure the supply chain and really be able to communicate to the consumers of the automobiles that when they buy that car, that the cobalt was ethically sourced and produced.
Sir, you referenced that 70% of cobalt comes from the DRC. From an offtake standpoint, how can manufacturers confidently rely on the DRC to meet their production needs?
I think it's a real challenge. So, obviously there are companies like Glencore who are, perfectly capable counterparties for the battery makers and cathode makers. But it's a wider issue, and it's an issue that's being addressed and is going to have to be addressed going forward, which is how do you secure clean cobalt, as it were. And I don't think you can if you are actually sourcing artisanal cobalt. I think there are solutions that could be put in place to actually do that. But I think today, if you are an end user, a consumer of cobalt, you really need to source that cobalt from outside of the Congo or from a mechanized miner. Whereas if you're getting it from artisanal mining, there's a great Wall Street Journal article about this kind of last year, third or fourth quarter. If you're getting it from artisanal miners, I think it's tainted. That artisanal supply is aggregated at refineries, and while one of the 25 sources may or may not be clean, if any of the sources are unclean, it's all mixed and it taints all of it. So I don't think those challenges have been fully addressed yet. And I think if an automaker wants to actually be able to ensure that it can say its cobalt and its basic material pipeline is ethically sourced, they're going to have to, for the time being, buy directly from mechanized miners or buy outside the Congo. Going forward, they're going to have to consider whether or not they're prepared to invest directly into mining companies or create pretty different environments around the artisanal mining in the cobalt, in the Congo.
You alluded to it, but just for confirmation, does Cobalt 27 have any offtake and or holdings in the DRC?
No, we absolutely do not invest in the Congo. We don't buy cobalt out of the Congo. We don't have streams or royalties in the Congo. From our perspective, we sit and we watch some of these large mining companies have problems in the Congo and with multi-billion-dollar market caps. And if they're unable to successfully navigate that environment, I think it would be a challenge for us to think that we could do that. So we've steered completely clear of it, and I think that's one of the offerings of Cobalt 27 is conflict-free cobalt.
From a sovereign standpoint, which countries have a strategic stockpile of cobalt?
Historically speaking, the U.S. and China did, but the U.S. government sold down their stockpile over the last decade, and today, really, China has the key sovereign stockpile, and they don't. There are different numbers about how large that is. I think it's a pretty material stockpile, but it's not used for batteries. Cobalt is critical in the aerospace industry, and so the cobalt that the Chinese government has stockpiled is likely earmarked for, jet engines and missiles and that type of thing, as opposed to batteries.
Now, from a manufacturing standpoint, which automakers have a stockpile of cobalt?
I'm not aware of any. I suspect there could be, but I don't think publicly there are any.
Now, cobalt is a byproduct primarily of nickel and copper mining. So how does the spot price of nickel and copper affect cobalt?
Well, over time, nickel and cobalt have actually been fairly correlated if you look, although that's not been the case certainly in 2019 as nickel is up 20-something% and cobalt is down. But I think the key correlation is that over time, in order to get increased cobalt production, you're going to need to see higher nickel prices and probably copper prices.
What is the current spot price of cobalt, and how is that in relation to the historic prices?
Yeah, so today cobalt is in the mid-teens. There are different types of cobalt. There's a metal, even within metal, there's a high grade and a low grade, and there's a hydroxide. And so there's a bunch of different products, but I would say it's in the mid-teens. And, it's actually right now, it's cheap, like on the inflation adjusted 20-year average, cobalt price is closer to $22. So cobalt's actually looking like a pretty strong buy as a metal at the moment.
For our audience members, we now see the value proposition we have before us in cobalt. Let's discuss the value proposition we have in Cobalt 27 and how you may profit. Mr. Milewski, please introduce us to Cobalt 27.
Sure. Cobalt 27 is really a proxy for the adoption of the electric vehicle. I don't know who the ultimate winner is going to be among the automobile companies, if it's Tesla, if it's Ford, if it's Beijing Auto. Maybe you should own a chip maker, NVIDIA. I don't really know. But what I do know is if there is a winner, then basic materials will be winners. And among those basic materials, we think cobalt will be particularly positioned to be a winner. Cobalt 27 gives investors access to those price movements in the cobalt spot price in three primary ways. The first way is just we have a 2,900 metric ton stockpile of cobalt sitting in LME bonded warehouses. The second is a basket of royalties on nickel cobalt projects globally, large scale projects that give the investor optionality. And then third, we have a stream on Voisey's Bay in Canada on their nickel cobalt mine. And we're also in the process of completing a recent transaction on Highlands Pacific to own a joint venture interest in the Ramu nickel mine. And so, we're not miners, nor are we going to be, you're not subject to CapEx in the same way that you are with a mining company. And instead, what we try to give investors is really the maximum torque to that adoption and price move, in the coming, months, days, years, as the adoption of the electric vehicle rolls out.
Now, were you able to procure your cobalt previously through streaming deals, or how was that accomplished?
So the streams and royalties are all financially settled, such that there's cash flow in the business when those particular royalties are producing. Whereas with the physical, that was actually stationary and is stationary, so that was a purchase. But the nature of a stream is that you typically sell the material into the market as it comes in, and then you take that cash flow and you pay a dividend, you buy back more shares, or maybe you make another investment.
Is the ultimate goal to set up offtake agreements with EV and battery manufacturers with your physical storage?
Look, I think there's two different kind of avenues that are being pursued. I think the first is just to look like a traditional streaming and royalty company, look like a Franco or a Wheaton or a Sandstorm, which is a very well-trodden path in Canada. You can get a multiple in some cases of over 2 times NAV. Today we traded a fraction of that. So I think that's one avenue. A second avenue, of course, is we're building a supply chain for cobalt and to a lesser extent nickel outside of the Congo. And through the cycle, that's going to be attractive to automobile makers, battery makers, and other end users of these products. And so you could foresee through the cycle how we would get approached by these individuals in different capacities to try to transact on what is clean material.
Switching gears, Cobalt 27 has strategically positioned themselves for the upside potential in the clean air revolution in EVs and batteries. But equally important are the people that are responsible for increasing shareholder value. Mr. Milewski, please introduce us to your board of directors.
Yeah, so our lead director is Nick French. Nick spent his career, since the early 80s, late 70s, trading cobalt, one of the most knowledgeable traders probably alive on the cobalt industry. And so he's on the board. You have Frank Estegard, a former KPMG partner who really adds a lot to the audit committee. Candace McGibbons is a mining executive. She's highly involved in the mining industry and understands a lot of the different aspects and concerns and transactions. Phil Williams, a banker, former banker who also runs a royalty company, is excellent in terms of just being able to kind of look at transactions and financings and add to the conversation. You have Justin Cochran, who is also the president and COO. Justin spent a decade as a banker in the streaming and royalty business, and then later went on to actually be one of the earliest team members of Sandstorm, and was critical there and ran the business development. So he's sort of been in the streaming and royalty business for his entire career. So it's a strong board.
Tell us more about Anthony Milewski and what makes him qualified for the task at hand.
So I'm Anthony. Look, I think, in a lot of ways, one of the most important things that I can do to help create value is make sure that we have the right team in place and the right strategy so that all of the team members are able to execute on that strategy. And so I really see myself as someone who puts forward that strategy and facilitates, Justin and Martin and the team members executing on that growth strategy and executing on our strategy to really be, a critical part of the cobalt and nickel supply chain going forward.
Who is on your management team?
So the key members of the management team include myself, Justin Cochran, and Martin Vidra. Martin Vidra spent over 30 years at Sherritt, ran a bunch of different aspects of that business, and is incredibly knowledgeable on nickel and cobalt. He sits on the Cobalt LME Cobalt Committee, and he's really industry veteran that adds a lot of insight for the business.
Let's get into some numbers. Please share your capital structure.
Yeah, so we have around 85 million shares outstanding, and no pref shares. We've never had a financing with an attached warrant. Obviously, there's some options outstanding to the management team as well, and then we have a revolver in place for $200 million USD, but we've not drawn any of it. So it's a pretty simple cap structure, and that's intentional. We try to keep it straightforward and simple.
How much cash and cash equivalents do you have?
I think approximately $50 million.
How much debt do you have?
We have none.
Who are your major shareholders and what is their level of commitment?
Well, I couldn't speak to the level of commitment, except that our shareholders have all been extremely supportive over the last couple of years in financings. One of them is Paula Investments. Another one is CI Harbor, BlackRock. I think Fidelity. We have Neuberger Berman on the register. We have a pretty wide range of institutional investors who have been very supportive over the last kind of year and a half, 2 years since the IPO.
Sir, are you a shareholder? And if so, how many shares do you own? And when was the last time you purchased?
Yeah, I think I own around 400,000 shares, and I purchased shares as recently as maybe, I believe it was January or February. So, big believer in the company, and also in buying shares myself when the share price is priced as it is today.
Multi-layered question. What is the next unanswered question for Cobalt 27? When can we expect a response, and what determines success?
I think the next big moment for us is closing the Highlands Pacific transaction. That's anticipated later this spring. I think that will be a catalyst. That closing, it'll show that we were able to transact. It'll also bring in a substantial asset, a producing nickel cobalt asset. So I think that's definitely the next big catalyst. That's a few months away, and that's heavily driven by regulatory matters in terms of court dates and voting and that sort of stuff. I think once we're through that, the next kind of big moment we'll be thinking about cash flow and dividends and that sort of thing. So I would say in the immediate term, the big moment for us is getting through the Highlands Pacific transaction.
Mr. Milewski, last question. What did I forget to ask?
I think you did a great job covering it. So I really appreciate your time and having me on the show.
Anthony, if investors want to get more information about Cobalt 27, please share the website address.
It's pretty easy. It's cobalt27.com.
For direct inquiries, please call 647-846-7765. That number again is 647-846-7765. Or you may email info@cobalt27.com. Cobalt 27 trades on the TSX.V symbol KBLT and on the OTCQX symbol CBLLF. Last but not least, please visit provenandprobable.com for mining insights and bullion sales. You may reach us at contact@provenandprobable.com. Anthony Milewski of Cobalt 27, thank you for joining us today on Proven and Probable.
Thank you for joining us today on Proven and Probable. Remember to like and subscribe for more conversations with the most respected names in the natural resource space. Check out our website at www.provenandprobable.com. The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.